The Aquest Podcast, Funds Industry Conversations.
Hello, podcast listeners, and welcome to this episode of the Aquest Podcast with me, Danny Lawler. If you're new to the Aquest Podcast, do hit subscribe, and if you like what you hear, don't be shy about hitting the like button too. This is a Director's Chair episode, where I chat with Eoin Motherway, who is an independent director, or INED, across a number of different types of firms in the Irish financial services industry. Anyone who has listened to a few episodes of the Aquest Podcast will have noticed that we don't seem to be able to get very far into any conversation with any guest before we start to hit on issues around digitalization and the use of technology and the different risks and opportunities that brings. This conversation is no different. We get very deep into things like the Digital Operation Resilience Act, or DORA, MiCA, which is the Markets and Crypto Assets Regulation. We talk about the tokenization of funds, and we talk about the ECB's expectations of some ICT and technology expertise and experience and knowledge at board level in banks across the EU, which we likely see pushed out across other types of firms as time goes by. So lots to talk about and lots of ground covered, a lot of it to do with things related to technology and digitalization and ICT. But as ever, Eoin is very knowledgeable in what he is chatting to us about, and very engaging and interesting guest to have on the show. So with that, let's get on with this episode of the Aquest Podcast.
The Aquest Podcast, Funds Industry Conversations.
Hi, Eoin. Thanks very much for joining me in the Aquest Podcast. How are you?
I'm sparkling, Danny. How are you?
Sparkling. Oh my God. I wish I was sparkling. What has you sparkling?
You know, I guess there's a standard Irish retort of how are you? And they say, I'm not too bad, which is 3 negative words. Or they say, I can't complain, which is 2 negative words. So who wants to talk to that? But I guess really I'm restless because there's so much going on across the industry, right? And if you look at even our funds industry, which is a staple playground for you and I, and the report that's come out last week, the Indicon report, shows 19,000 people employed, an economy-wide employment of 37,500. And for me, the zealot for regionalisation, 46% of our industry is now outside Dublin. So there's a huge amount going on at the industry level. I think the other thing I'm seeing real traction in Ireland and internationally is the whole Web3 community. And that's not just about crypto trading, it's about blockchain solutions, various innovations in community voting, and they really view Web3 like a community. So a little bit like in the Irish funds industry, where we all know each other and we collaborate and we are competitors. They actually have a word for it. They call it co-opetition, right? So they compete and they collaborate in equal measure. And then I guess on the political landscape, that's making me restless. It's they're calling it, I think, the year of democracy, the most number of elections in any one year ever. And while I guess the UK outcome was a foregone conclusion, I think we'll have 2 elections in November in the US and likely in Ireland, which are very much undecided at the moment. And then regulatory-wise, I think the EU AI Act went live. We have MiCA coming down the track and DORA. And all that goes with it. So I'm restless but enthused.
Isn't it always this way, though, in terms of certainly the regulatory agenda is always packed?
I think it is, but I think the regulation is moving from just being something to comply with to something you live as. And I'll explain that, right? So if you have various pieces of regulation about reporting or threshold limits or concentration, etc., it's an ask to comply with. But if you look at what's happening with DORA, that's actually asking you to look at how do you run your business and do you understand it end to end, and all of the pieces that look at that, and how do you adapt your staff, your processes to understand that you're codependent on many service providers to you, right? And the easiest analogy I'll give you is if you think about GDPR was a big heavy lift for everybody when it came in, but now it's part of the psyche of how we behave. Can I send that under GDPR? Or maybe we shouldn't do that. We should check the GDPR regulations. So it's a different way of regulating the psyche and the behavior as opposed to the compliance of the task.
Which is not by accident, I suspect, from a legislator or regulator's perspective.
I don't think so. It's not by accident, no. I mean, we like to think in Europe that we live to the spirit of the law, whereas other jurisdictions may be to the letter of the law, but it always helps to move the spirit along and give it further incentive.
It does, and I don't know if you read the Draghi report a couple of weeks ago on the future of the European Union and the need to focus on digitalization and on increasing productivity. But it did call out that many firms leave Europe because of the regulatory burden and relocate to somewhere like the US, which was fine. I think that's probably an accurate assessment. But then the solution suggested in securities markets was to make the ESMA in Paris the equivalent of the SEC in the US, so that they would be the central house for regulation across Europe. And I didn't chime with me that was the solution to the heavy regulatory burden problem. Surely less regulation is the solution to the regulatory burden problem.
Yeah, look, I think there's always going to be a dichotomy of you need regulation that everybody can agree to so that your product and your customer base can be outside of one country, right? But then you also need nimble and flexible stuff for local nuance, local company law, all that kind of stuff. So it's nothing new that unfortunately firms don't come into Europe or EU27 because of regulation, or that some of them leave. But there's equally a tussle within Europe where, and I think MiCA is a good example of that, where different jurisdictions are adopting different paths to authorizing people as a CASP. And people are now choosing which jurisdiction to go to based on that. So I don't think that will ever go away. It'll just consistently evolve.
Yeah, and maybe that's not a terribly bad thing either. But I wonder whether, as an approach to regulation in Europe, maybe we need to think more about what do I need to regulate this firm properly, as opposed to what could I possibly ask for, and ask for everything in order to regulate and supervise a firm. So I just wonder whether we could do nearly as good a job with much less asks of firms, in terms of, for example, you look at EMIR and reporting 200 and something lines of data. Maybe if that was 50 lines, regulators could do most of what they're doing at the moment, but it would be much less of a burden on firms.
It might be, but I guess at the core of every piece of legislation, regulation, taxation is protecting the end consumer or the end saver. So can it be made efficient? Absolutely. Can you remove some of this stuff? I don't know. I think if there's focus on the efficiency, the digitization, greater use of tools and data scraping, etc., you can probably keep all of the asks, but source, ingest, process, and review the data better to get you the outcome you're actually looking for in the first place.
Oh, that's a good segue, because I do want to talk about digitalization. But before we do, let's just chat a little bit about the INED landscape. I don't know what your sense is of the INED world in Ireland at the moment.
It's an interesting space. There are a lot of candidates in the space, all vying for work. So, I mean, there's good supply of INEDs, is the way I would put it. I think the work is quite varied, and I think expectations and numbers of INEDs on boards is currently evolving quite a bit, right? So, I mean, the minimum requirements are 2 in domicile and 1 independent. But it's very clear in the payment space, in the EMI space, in the VASP space, which will soon become CASP under MiCA, the expectation is 2 INEDs. So it's not the letter of the law, it's the spirit of the law and the expectation of the bank. And that's the direction of travel. Similarly, I think we're getting to a point with digitization, and this is before we even get to digital assets, but the amount of technology that is now used to produce, whether it's a fund nav or an e-money token or something in the payment world, the dependence on it is very clear now because we have DORA coming, which we'll get onto. But it does mean that as an INED, you have to be as informed about technology and emerging strategies and tools and pieces of software that help you, as well as the actual financial services legislation around product.
Yeah, and we just chatted about how large the regulatory burden is, and I guess the only way you can carry that burden is to use technology to help you to, as you said, scrape the data for your reporting, or otherwise build your compliance platforms. But definitely tech has to be the background to compliance and keeping the right side of these rule books, because otherwise the extent of regulations is too great for that to be done, in any kind of manual way.
It is, and I think the ECB have put down a marker in February of this year where so it's not legislation or compliance or regulation. I would call it an expression of expectation. So they have expressed an expectation from the ECB to national competent authorities to expect of those that they supervise, so in this instance, banks, that there would be at least one INED on the board who understands technology or has technology experience or has had some part of their stewardship roles in their past career where they had technology bills, etc. So that's a clear statement from the ECB that the board needs to be technology savvy. That ultimately will have to trickle down into every regulated vehicle, down to funds and VASPs and payment firms eventually. Not immediately, but it's inevitable that this type of expectation is going to trickle down through all of the regulated landscape, not just from regulators, but also from investors and clients and what have you. So the day of just being a regulatory compliance expert, I think, is changing.
Or even just being a funds regulatory compliance expert, because I think when you mentioned the INED world, you mentioned about 3 or 4 different types of firms, from funds to payments firms to VASPs or CASPs. So the ask of an INED or professional INED is probably a little bit broader than it used to be, because my sense is that the chance of just building a portfolio of fund directorships is probably quite low. I think you do need to fish in other ponds, as it were. So you will need to be able to turn and deal with firms that have different types of licenses. Yeah,
and I think there's great value in that, though. I mean, I'm in that boat where my portfolio isn't entirely regulated funds business. I do some fintech work. I sit on the Western Development Commission, which is a state board, and I sit on some regulated and digital asset boards. And you can bring different things and different insights in a kind of a pan experience way. And I'd say the role of the INED, and this is a personal view, people will disagree with it, but I think the role of the INED is changing, and the role of the board is changing, in that it's not always now about a mix of skill sets. So there's various parties will advocate for different skill sets on a board, but a skill set is a skill. What you now also need on boards, I think, are knowledge sets. So while you might be skillful in analyzing something or analyzing data put in front of you at the board, if it's something that's deeply technical about blockchain, for example, if you're knowledgeable about how blockchain works from the ground up, then as an INED, you can ask a better question because you know what to ask. It's this unknown unknowns piece of it that is in the skill set. It's the known knowns come through in the knowledge set. So I think it's evolving now to being multidiscipline in different board styles, but also you have some with skill sets and some with knowledge sets.
And having that knowledge around ICT risk and digital and digitalization and digital assets is certainly the direction to travel. Even, it's a couple of years now since we've had CIO, Chief Information Officer, as a PCF role. So a nod to the fact that whoever is in charge of tech is an important person in a financial services firm, as important as whoever's in managing risk or your finances or anything else. I wonder, you mentioned DORA, so the Digital Operation Resilience Act comes into effect at the start of next year. With a broad range of board tables to sit at, do you notice that the more techie firms are better at DORA or are further advanced compared to more traditional type firms, or is everybody struggling? Is everybody there? Or what's your sense for where DORA implementation is at?
I think it's very difficult for people. So I'm seeing a lot of DORA work at the moment with 2 reg techs that I chair. They're out the doors with different types of DORA work, either in the compliance piece or in securing the legal entity identifier piece. I would say firms weren't helped by the fact that there was very late clarification on some of the regulatory technical standards. The implementing technical standard has been available for some time. And I think there are so many templates within DORA and 105 data fields to map out and report on. It's actually a really complex piece of legislation. And there is the argument, Danny, that we've been through outsourcing and creating proper outsourcing models. We've been through operational resilience and creating proper models around that. And yes, they all contribute to how you execute your DORA plan. The difference is in outsourcing and in op resilience, most of how you run that is up to your own design, whereas DORA is quite prescribed with, 15 plus templates and 105 data points. You've got to hit all of those. And if you are a straightforward, single entity, it's pretty straightforward. But as we know, even if we look at our own funds landscape, generally speaking, most of the providers are part of an international firm. Some of the contracting is done by a general services entity that isn't regulated, but they now have to have an LEI and be tracked and traced. So you kind of get into building the register of information becomes really complex, because if you change one thing in one template, it impacts something else. So you're into multi-dimensional modeling when it comes to impacts, outcomes, tracing, oversight. And then there's the whole reference point piece of it, which there's now a bit of an argument emerging between whether you use the LEI or the EUID. So that needs to be bottomed out. But we're inside, 75 working days left to go live. So lots of firms have lots of work done. I think it's imperative that firms need to be able to show genuine endeavor to trying to hit that deadline. But I think there's an awareness it won't be perfect. The challenge is that a big part of DORA's overall objective is to identify ICT firms that are critical to the financial services landscape. And that is going to be done by the ESAs requesting information from the NCAs in Q2 of next year. So it will be evidence-based. But in order for the NCA to provide data to the ECA, of course, they're going to have to come out to individual firms, likely the end of March, early April. So there's a lot of work to do, and there's definitely asks that are going to come, but ultimately it's all going to contribute to a much safer infrastructure. I mean, we had the CrowdStrike issue, which wasn't necessarily financial services, but it really brought home, if you have something like that and it brings financial services to a halt, that's the objective that DORA is trying to avoid. So the purpose of it is really, really fundamental and really good. It's forcing firms to really look at how does your business run as opposed to what have I personally outsourced. But there's a huge amount of work beneath that. And then that's before you even get to, are your legal contracts covering all of your abilities to get all that information from your ICT providers. So there's a lot of repapering of contracts being done as well on the sidelines. So there's something in it for everyone, but everyone's got to hit the 17th of January.
Yeah, and it feels to me like other implementations we've seen of kind of big regimes, big changes. January will roll around and hopefully firms will have done as good as they can for that date, but it certainly won't be perfect. And it'll be a matter of doing your best for January and then continuing to improve and refine as there's more experience and as firms get better at doing this and as the guidance gets clearer. I suspect you won't be able to just put it away and forget about it. But I think the real win for DORA, if it's to work, is this change of mindset. You mentioned very good analogy there with GDPR. I think it's the same here. And into the future, it is that firms have very much in their awareness the risk of ICT within their business and what could go wrong or what would our fallback plan be, that becomes a much more prominent part of how they think than it might have been in the past. And then hopefully they're in a better place if something did go wrong. So either it doesn't go wrong or they're able to recover more quickly or the impact is much less because they've done their planning in advance.
I agree, but I think it's vital to understand that this isn't about compliance. This is about conduct and how you would conduct your business on a daily basis into the future. So it's how you live and breathe and work your business as opposed to another piece of compliance that you need to squirrel away. So it's always interesting to ask a firm, who is your DORA lead? Is it the compliance officer or is it the risk officer?
Absolutely. And isn't it funny though, like if a firm suffers a cyber attack and let's say data is stolen as a result, the firm themselves nearly end up as the bad guy, even though they've suffered a crime. You know, they're the ones who'll be under the microscope and how good were your systems and why did it happen and what data is failed. And you've got the data protection commissioner involved, you've got the central bank involved, you have individual clients that may have a claim, all in the back of you as a firm suffering as a result of a crime. It's a tough place.
Something in it. something in it for everyone. And
Yeah.
and the unfortunate thing for the poor firm at the time is they have so many people asking for so many updates when really what they need is clear space and headroom to recover, get it done. But it's not as straightforward as everyone thinks, you know.
No, and if you're in that situation, yeah, any advanced planning you have done will, I think, reap the rewards if you do end up in a situation where you've been attacked or hacked and are trying to recover and trying to deal with all your stakeholders and everything else. Anyway, moving on to something hopefully a little bit less grim. I wanted to just chat a little bit about fund tokenization because it kind of links into what we're talking about in terms of technology developments and increasing use of technology and innovations. Tokenization of funds in particular is something we've heard about for a little while, but I don't know. Have you seen this come to life? Are you seeing use cases? Are you seeing this actually being product that firms can deliver?
I do. I think it's inevitable. I think tokenization will be widespread in the funds industry within the next 3 years. I try and capture this on a Friday. I'll do a post on a Friday on LinkedIn with a hashtag called Friday Fund Token. So you can find some stuff there. But there are loads of instances of tokenization happening at the moment, particularly with the issuance of debt or fixed income from some of the banks. We have seen during the year, of course, the launch of the Bitcoin ETFs and the Ethereum ETFs. There's some Solana ETFs in Brazil. There's an application now for a Ripple ETF. So that's not quite tokenization of a fund, but it does show you that funds holding digital assets already has significant momentum. The one that probably is of the greatest interest is the concept of tokenizing a money market fund. So when we think of a money market fund, it is a NAV of one always, unless in times of trouble it breaks the buck, which is an extremely rare, thankfully, event. But it is a NAV of one. It is underpinned by short-term liquid commercial paper, commercial debt. So it generates a yield. Usually they're regulated and have 7 and 30-day liquidity, etc. So in effect, you probably have the best example of a stable coin backed by real assets that generates a yield. But there's 2 ways to tokenize a fund. You can tokenize the portfolio, the underlying assets within the portfolio, or you can tokenize the investor holdings or the transfer agency units. And what is being done right now in Franklin Templeton, Fidelity, and BlackRock is that they have each tokenized a money market fund. They're not domiciled in Ireland, but the tokens have been accepted, particularly for the BlackRock fund, as collateral by some broker-dealers. Now, right now, there would be language clarification needed in EMIR to see if money market fund holdings qualify as eligible collateral, and there are some questions out to clarify that. But even this week, the CFTC, the Commodity Futures Trading Commission, that is a global market advisory committee, and 2 days ago they recommended that we look at the tokenization of money market fund holdings, so that it's the TA investor holding in the money market fund, that we look at how that could be accepted as collateral. So that's the most emerging one. And when you think about the opportunity for Ireland here, Ireland is the outright preferred domicile for money market funds in Europe. So that's great in terms of opportunity. It's also significant in terms of macroprudential risks that the regulators look at. So can we bring safe, transparent, frictionless techniques to that whole sector and take some of the risk out while also increasing efficiency and use case and freeing up liquidity for collateral? There's a lot to be gained from looking at all of that type of tokenization. On the portfolio side, I think it's difficult to tokenize, say, global market equities because everybody would have to move on the first morning, right? Now, in reality, all these assets are already digitized. Like, we don't swap share certs anymore. It's a digital record. The piece that's behind is the payment settlement. And I think T+1 settlement takes some of the heat out of the need to tokenize, say, global equities or fixed income. But private assets in private equity and private debt, where the population tranches of the asset class are smaller and the population of the investors in the fund are smaller, I think they're really good use cases for tokenization of the end-to-end fund. And then I think the 2 remaining pieces are, can you use tokenization and or blockchain for reporting? So there's a really interesting initiative in the UK with the Trustee and Investment Savings Alliance, TISA. They have a working group with a working product that has signed up clients where they have agreed a regex template of data from their membership. And they suck in all of that data to an engine on the blockchain. And it runs the EPT, EET, EMT templates that are required under regulations. And it publishes them to the blockchain. And the upside is the following. They've estimated that there's a 20% error rate in distributors of having the wrong version of the templates because they're all PDF'd and sent out or ingested in one way or another. But if it's perfectly transparent on the blockchain, then you can raise a flag with a query. The originator sees the flag, republishes it, the flag goes down. So that community voting ethic within Web3, applying that to traditional financial service reporting is something quite revolutionary. So that's underway, and they've got quite good coverage now, and they're going to hit a certain number where the distributors will just adopt it. And then the fourth piece of tokenization, I think, is the whole area of verifiable digital credentials. So people will be familiar with the verified tick on LinkedIn, where you go in and you either do your email or your passport or whatever, but it verifies you. Or if you've done some courses, you might get your accreditation back as a credily, and somebody clicks on it and it says, Danny Lawler did this course on whichever date, and here was his result. Whereas previously, you go to an employer and you sign a waiver, and they go back to your university with the waiver to say, I need a copy of his results. I have permission to get them. All of that stuff is credentials, right? But you can apply that to tax credentials, tax clearance certs, dividends. So the whole area of verifiable credentials and wallets, reporting, tokenizing the portfolio, but particularly tokenizing the investor side of the fund, I think is really interesting. And even if you look at the BlackRock Biddle Fund, you can click on Etherscan for the link to that fund. And this morning, it'll tell you there's 519 million in the fund. There's 23 holders. It gives you all of the names. So the transparency here is instant. So that's what's going on in that space. And I think when you look at the size of our industry, being the third largest in the world, the second largest in Europe, the largest for money market funds in Europe, the opportunity for the whole area of tokenization, Web3, digital credentials is absolutely massive. And hopefully, if we manage to get through MiCA properly and authorize different firms to do their pieces, we'll be a dominant force in that area.
It's definitely something that we need to be mindful of and ideally at the forefront of in terms of tokenization and leading developments, both given our financial services industry and our funds industry and our technology industry. I wonder, though, is it, are the benefits big enough to justify and merit the effort and expense that would be required to tokenize, say, a money market fund when it's already pretty liquid, right? Digital or more illiquid assets, perhaps. I just wonder, you see other blockchain initiatives have kind of seem to have fallen, not in financial services necessarily, but in other sectors fallen by the wayside when the effort being put in just wasn't reaping the rewards. And I wonder whether this will make it all the way to the end line in funds tokenization.
I think it will, right? And I'll give you a binary example of why I think it will. I got a WhatsApp from my daughter one day. She was in the queue in school and she wanted to get a bowl of soup. She had no money. And by the time she got to the top of the queue, I had revoluted her the money to buy the soup. Seconds, right? So that's just cash moving faster. When you look at money market funds, it is so liquid. You can settle your position daily and so forth. It gives managers and banks and other corporate treasurers and trading institutions a new form of collateral to do better trading and faster trading. So I absolutely think it'll come to pass. And I think the focus from the CFTC and their committee driving this, plus the fact that BlackRock, Fidelity, and Franklin Templeton have proven that it can work, it has to come to fruition. And I think that's going to be the first big example of this happening in funds.
Well, the last of the alphabet soup you mentioned there, the MiCA, the Markets and Crypto Assets Regulation. Let's just spend a moment on that before we wrap up. So it's due to come into, it comes into effect for crypto asset service providers at the end of the year. It's already in effect for electronic money tokens. There's a 12-month transition period for those already providing CASP services before the central bank has to grant them a license, which is a very short period of time, really. What's the CASP world looking like? Are we going to have a lot of CASPs in Ireland? Are we likely to be a jurisdiction of choice? How easy is it going to be to get a CASP license?
I hope so. I wish they hadn't called it the market in crypto assets. I wish they had called it the market in digital assets, because I think crypto asset trading is only really one component of the digital asset landscape. It's much bigger than crypto, but it is what it is. The transition period, I mean, the recommendation from ESMA was to, you can have up to 18 months. The recommendation was 12. Ireland has opted for 12. Luxembourg has opted for 18. So there's different countries taking different approaches to it. We already have a vibrant community in the digital asset space in Ireland. There's 15 plus registered virtual asset service providers, or VASPs. They all have to apply for a CASP, a crypto asset service provider. But there's also some working on a grandfathered basis, and there's quite a few have applied to come into the country. And the narrative, Danny, is very similar to the funds industry, right? We are inside EU27, native English speaking, have a tech community, have a finance community, and have young educated talent. So that the marketing opportunity for that product is very similar to the funds space narrative. I think there are a number of challenges ahead in that there are some firms that are operating in the space where they have a combination of an EMI and a VASP, and the transition period only applies to a VASP entity. So how we amalgamate those, I think, is something we will have to look at. Equally, I would say, to be very fair to the central bank, they haven't been statutorily appointed to be the National Competent Authority yet at time of recording. So that needs to happen, which doesn't help, narrows the window a little for them. The last time we had a deluge of applications was Brexit, 120, 130 applications, which, to be fair to the bank, was for new applications for something they had already authorized in the past, like a fund, a management company, a MiFID firm, and so forth. Nobody has granted a CASP license yet, and yet there is the deadline. So there's a few ingredients in the pot that make the landscape interesting. To be very fair to the bank, they are hosting meetings with various various VASPs, and we have a community of the VASPs gathering now and sharing insights and experiences and how they might approach stuff. So it's very early days, but I do think MiCA is to digital assets what UCITS and AIFMD is to the funds industry. And look at what we did with that. Imagine what we could do with MiCA. And then you have MiCA and Web3 sitting alongside a vibrant funds industry, and the world is our oyster. And I think it was really heartening in the budget speech to hear Minister Chambers bring up the Irish funds industry for the first time in a budget speech, citing the jobs and citing the contribution and the fact that Fund Sector 2030 will shortly be made available, and that he'd be bringing various proposals to government. So there's an awful lot of really positive things on the landscape to work on, which is why I come back to the fact that I'm restless, because there's just so much to keep an eye on and so much to keep track of. Exhausted is probably a better word when you see the extent of the work. But certainly I think for CASP applications over the next period, Central Bank has been very clear about setting expectations that a VASP registration is not a CASP authorization. The processes are going to be quite different. There's going to be a lot of expectations on firms about the quality of the applications and the depth and the level of detail they can go into. Absolutely. A lot of ground to cover in the next, what have we got, 15 months? Yeah, absolutely. And that means that the industry has to step up here. I mean, you are going from a registration to a full prudential authorization. So there is a lot for firms to come to terms with there. That's a whole new way of running a business and a whole new ask of how you do things. So it's not necessarily all about the regulation. It's also about how the industry steps up, and hopefully that co-opetition piece of it will help everyone get to a better place. I think so, and it is a challenge, because on the firm side, they often tend to be firms that come from a more technology background rather than the financial services. So moving from zero to a registration, of an AML registration as a VASP, to a full authorization can be quite a shift in for those firms. And then on the central bank side, you said at Brexit they were authorizing loads of new firms, but they were stuff they knew about, funds and management companies, and even you take in
when they extend the credit servicing rules or they extend retail credit rules or whatever it is, they're all types of firms that they're quite used to and can understand the risks underlying them. When you come to CASPs, trying to understand the risks underlying the use of a blockchain I think is quite a different ask, and it's going to require quite a lot of education and learning on both sides, but on the regulator side as well. So I think having a community of VASPs or firms in this space who could share amongst themselves information and hopefully feed that into the central bank, I think could be a very valuable tool on both sides, because everybody's learning here. It's not been done before, and it's not going to be long until December 25 rolls around. And
look, we've seen it work in the past where you have BPFI or Irish Funds or other industry organizations which creates a channel for the bank or legislators or politicians or whomever to come to and learn, but equally for those organizations to advocate and represent individual firms or collective firms on something, to a mutually beneficial end. So there's a lot of good stuff to come, and I think it's really exciting for Ireland that there's so much potential.
So as you sit back in your director's chair, your INED chair, Owen, and survey the landscape, there's plenty going on. Plenty to keep you busy, particularly as you look across not just the funds world, but way into the digital assets and the ICT side of it. So from next kind of 6 months, what's your priorities?
I think the priority is actually the staples, right? So whether it's CASP, digital assets, or a UCITS fund, completely opposite things. The staples with how you run those businesses are exactly the same. It's about a proper framework. It's about PCF roles. It's about a risk person, a compliance person, operational resiliency. It's about all of the real, traditional TradFi stuff being applied to the DeFi world. But that's their skill sets that have built so many of the different parts of our financial services industry, from banking to funds. It's all here. We're just applying it to a new product.
And putting your customer right in the middle of all of that. You've got a good
Absolutely.
mix. Yeah. Well, on that note, I'm going to wrap it up. Thanks very much for your time, Owen. Great insights there across a whole range of issues.
Thank you for having me.
The Aquest Podcast, Funds Industry Conversations.